You are watching Market Watch, the brief overview of the key events from the world of finance. The published report on changes in oil reserves in the United States recorded a record weekly decline since August last year. At the same time, the consensus forecast from analysts surveyed by Bloomberg indicated a decrease in crude oil reserves in the range of 2 million barrels. But the actual data exceeded the forecast by more than 4 times, recording a decrease of more than 9.2 million barrels. A reduction in stocks is a strong bearish fundamental factor, but it may not be enough to resume growth. This is indicated by the restrained market reaction to the emergence of 2 strong growth drivers at once. The first is an unexpected decrease in stocks. The second is a significant increase in business activity, which also significantly exceeded the projected values. Pay attention to the lack of steady growth in the price of oil and, as a result, a breakthrough with subsequent fixation of quotations above the technical resistance level at $76 per barrel. Despite the regular appearance of bullish fundamentals, the price is extremely reluctant to rise. Neither problems on one of the key trade routes, nor a decrease in the likelihood of a recession in the United States, or even an unexpectedly strong decrease in stocks, contribute to the development of a strong growth wave. Therefore, in the event of a bearish fundamental factor, the activity of sellers may increase significantly, collapsing the quotes of black gold. And now let's move on to the precious metals market. Gold is extremely sensitive to changes in the probability of a reduction in the key interest rate. Therefore, the publication of unexpectedly strong data on changes in the index of business activity in the U.S. services and manufacturing sector put strong pressure on gold. A significant increase in these indicators cancels the recession in the United States, which in turn will allow the Fed not to cut the rate. Keeping the interest rate at a high level will allow government bond yields to slow down and even increase slightly, thereby putting pressure on gold. Therefore, any additional confirmation of the stability of the U.S. economy will put pressure on gold. Bitcoin also remains in the red zone. But despite its collapse under the psychological support level of $40,000, there is no panic. The activity of sellers under the marked level remains weak, being a good signal for buyers. Nevertheless, it is too early to talk about the completion of the corrective decline. The first signal indicating the willingness of buyers to resume growth may be a return of quotations above $42,000. To do this, it is necessary to further increase the net inflow of capital into the created Bitcoin ETFs. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.